How did the real estate market do in June 2023? I'm Brian Khatambakhsh, team lead at Khatambakhsh Real Estate Team with Remax Hallmark, and I do this every month. I analyze the real estate stat number, and I tell people what it means to you as a consumer, whether you're buying a home or selling a home. So let's look at the market at June of 2023. This is for city of Mississauga, but it could well apply to GTA because I look at the number. The numbers are the same, but the trend is the same. Numbers are different, but the trend are the same. And here's what happened. So here's June of 2023. At the end of June, we had 1,245 active listings for sale. That's total number of detached, condo, everything. And the number of sold units was 685. I want you to start thinking as this as a supply and this as a demand. Sold units are the demand, and the active listing coming in the market is supply. The whole economy system is based on supply and demand. Where the supply goes up and demand goes down, prices will go down. When the supply goes down and the demand goes up, prices will go up. As simple as that. It's economy 101. That's what I want to bring to your attention. So if you look at the numbers from last month and this month, the big surprise of June 2023 was that, hey, Bank of Canada came and increase the interest rate by 0.25. But not just that, the language that they used to scare the market or to tell people to be cautious and had a big effect on the market. Not big, but somehow it tilted this balance a little bit toward the other side. And this is what happened. So if you look at the numbers from May of this year, this is 2 months ago, we had 1,025 listings for sale. At the end of the June, after the announcement, and 3 weeks after that, we have 1,244. That's about, this red one means 22% more supply. So supply side went up. On the other hand, we had 844 units sold in May, now it's 685. That's minus 19%. So you can see what Fed is doing. It's basically trying to just balance this teeter-totter between supply and demand. And what they did, it tipped this a little bit on that side. So it had a little bit more active listing now and about 20%. So almost 20% less sell, almost 20% more supply. And that's what they do. They try to balance the inflation and the interest rates and all that stuff at the same time. So, but if you look at the numbers, as I always do, from last year to this year, last year we had 17% more listings. So number of supply from last year to this year is from 1,500 to 1,200 minus 17%. And compared, like June of last year was very terrible because the interest rates were going up huge and people were just panicking, putting homes in the market, so the supply was a lot more. But you also see that the sales has gone up from last year to this year. Last year in the month of June, we had 600 total sales. This year we have 685, so it's about 4% more, 14% more. So the bottom line is this. Market was getting hot even with the current interest rates, wherever they are, everybody thinks is high, still was kind of heating up a little bit. And Fed, like Bank of Canada realized that. I keep saying Fed like US, but Bank of Canada realizes that and start doing a little bit more to just balance this. Their job is to keep this teeter-totter like this. They don't want it to go this way, and they don't want to go that way, because this way will be a huge recession, that way will be a huge inflation. Their job is just start this teeter-totter, balancing it. And what they realize is that, hey, it was going a little bit on this side, and what they did is they increased interest rate, so the supply went up a little bit, and then the demand came down and kind of balanced it. It's a tough job. They're trying to balance the inflation and recessions and all these demands and stuff. However, I'm gonna say something that I've always been saying. The underlying demand for real estate in Canada is huge. A lot of immigrants coming in. I don't know how many hundreds of thousands, again, government of Canada decided to fast forward to bring immigrants to Canada. They will help to build homes. But before they build homes, they need a home to live in, and to build a home. Shelter, housing is a basic necessity of life. If people cannot afford it because of the interest rate, they have to rent it. Rent has gone up by 25 to 30% since last year. So any way you look at it, whatever you buy now, this time, 3 5 years, 10 years, 20 years from now, you will be very happy you made that decision. You will be glad you did it. Own a real estate, something you can afford. If you own a real estate already, save your money and own another one for investment. That's 5, 10 years down the road. It's gonna keep putting money in your pocket. It's a guarantee income, because people need housing. People need somewhere to live. Pre-construction market is very healthy. Everything indicates that the long term, you're gonna be doing well. Short term, you may have this, juggles and little bit ups and downs, but long term, if you look at it, 5, 10, 20 years, you're looking at it like this. You may have a little bit jittering going up here and up and down, but this moving average is always high. I'm Brian Khatambakhsh. I'm a real estate consultant. If you have any question about real estate, let us know. We are here to help. 647-848-2652 is the number. You can reach me or DM me. You can text me. You can email me. Any way you like. If you search us, we are all over the internet, and you can contact us any way you like. Until next month, have a fantastic day. Enjoy this summery weather and stay safe. Never back up from investing in real estate. Long term, you'll be happy. Until then, have a fantastic day.